Hello everyone, this is Golden Abeca FS. Today we are going to talk about the P of SRP, which is point of interest. All right, so today what you will learn what qualifies as a valid POI. Point of interest means POI, that's POI. You will learn what qualifies as a valid POI and what does not. Mitigated and unmitigated POI, what inducement is, how to identify it, and how price moves after clearing liquidity, the three types of SRP, and how to identify the particular one the market wants to use inside your higher time frame POI. Why price sometimes goes deeper than your POI, and how to stay in the trade. Aligning POI with structure and range, when a POI becomes a trap and when to walk away. Lower time frame confirmation at the higher time frame POI. So so that is all what we are going to learn today. So let me share my screen so that we can get started. Let me accept someone. Okay. All right, person has joined. Okay. Okay, so point of interest is what some people actually call key level. Yes, point of interest is what some people actually call P level. So this is the third and final layer of SRP model, and it is the most precise, but also the most abused. A lot of people abuse it. Most traders treat their POI as any zone that looks interesting on the chart. They circle a candle cluster, they highlight a round number, and they call it POI and wait for price to arrive. That is not POI analysis. That is wishful thinking. All right. A valid POI in the SRP is end. That's why it's always better to enter a trade that you waited, you saw how it formed. The YPY is end, is sit as a specific Fibonacci level inside a confirmed 4-hour range. It has an unmitigated imbalance behind it. It is inside the correct premium or discount zone. If it is for sell, it should be inside the correct premium zone. If it is for buy, it should be inside the correct discount zone. And it is backed by the confirmed structural direction of the 4-hour chart or the daily chart. All right, so we'll look at every dimension of POI, what makes it valid, what makes it mitigated, how inducement works before price reaches it, all three types, and how to identify them in real time, and why price sometimes goes deeper than expected, and how to combine POI with structure and range for maximum conference when POI becomes a trap. So what qualifies as a valid POI and what does not? A valid POI is not a zone you choose. It is the zone the market created. All right. IPOI is the zone the market created, not the zone that you chose, it's the zone the market created. All right, that's a valid POI. So for let's look at this. Market broke this low, SBR, and even though that market sometimes can be quite chaotic, this was what it did. Coming back to that POI, and from there it sold. So this is the range, this is the full range. This is the high of the range. This is the low of the range. And market came to POI, and that was where it sold from. Let me remove all of this. All right. So this is a far range. So the POI, and it kept coming back to the POI, and and um and selling from there. All right. So basically, uh, how do you enter? How do you enter when you've marked the range? When price comes to to your zone, how do you now enter? So you go down to the lower time frame. The three time frames we use is 15 minutes, 30 minutes, or 1 hour time frame. All right. So let's go down to this was on 25th May. So let's go down to this zone so that I will show you what I mean. Uh that was on 25th May 20. So on 1 hour time frame. So this was when price broke below. So after price broke below, it came back to the POI. So the first time it came back to the POI, this was what it did. So this is, you can also use something like this. The first time it came to the POI, it came to 0.6, and this was the first. So unmitigated POI, the first time that this key level is fresh. Price has not used it before. Every other time price came back here, this time it came back here, it is mitigated, but still price used it. So this was so let's even focus on this one because I like it. And this is also type 1 SRP. Type 1 SRP is when price comes to 0.618 of the Fibonacci and sells from there if it is for sell, or buys from there if it is for buy. Type 2 is this is type 2, 0.7. When price comes to 0.7 or 0.85 and buys from there or sells from there. Sometimes price can go beyond type 1 and come to type 2 because price is seeking liquidity, or maybe a lot of people are already trying to sell at that type 1. Market sees it and use them as liquidity. And if that's why sometimes your structure is correct, everything is correct, but market sees you out and sells, just like what happened in EU today with our setup. Everything is correct. Market hit a lot of people out and still sold. It did not get to the final TP, but at least it sold. So there was a liquidity that market was targeting. There was a liquidity that market was targeting. And sometimes market does 100% retracement. This is type 3. Type 3 is 1 of the Fibonacci. One written 1. Right? Market does 100% retracement and sweeps this zone without closing above it with the body of a candle for sell, or below it with the body of a candle for buy, and then from there the main move will happen. But here, when market closed below here, it came to type 1, which is 0.618. They call this the golden ratio as well, of the Fibonacci. So what are you looking for? Basically, yeah, you want price to close below the range. All right, basically you want price to close below the range, but not just that. You can use this when price comes here, closes below. This is like a small low. It couldn't break a new high, closes below. You came for the retest you set. But there's something I want to show you on the 15 minutes. All right, there's something I want to show you on the 15 minutes. So let's see that. I mean, 50. All right, we're there. All right. So this is what I want to show you, and that's why also 15 minutes is good. Sorry. This is what I want to show you. When price came, you don't just RBS SVR, even on the lower time frame, it's not just price closing below. It's not just candle closing below a low. No, if you do it that way, you will market will keep going and hit you up. You want to also check that structure has changed. SBR for sale happens when structure has changed internally. So this is higher low. Price came here, higher low, higher high, higher low. You see new higher high. Then it's created a higher low here, and then this is higher high. All right. Then what? So you want price to break a higher low. when price comes to, if it is your 15 minutes, even 1 hour, even if it doesn't do it on 1 hour, you want to confirm that he did it on 15 minutes. You want price to break the higher low. When price comes to your 4-hour POI, you want price to break the higher low. That is for sell. If it is for buy, you want price to break above the lower high. So for sell, you want price to break below the higher low. So when you see SBR, it's not just a candle closing below. Look at it, candle close below. So candle can still close below, maybe it came to pick order, and it will continue to buy. One market way we want to enter via continuation. We are not entering via reversal. And if you are trying to take this kind of risk, you are trying to time a reversal. No, you want to enter when market has confirmed that it has reversed and it started moving that way, and then you just enter as continuation. When it came back for retest, you enter. So the lower time frame serves a higher time frame. All right. But right now, when market came back after 4 hour has confirmed SBR, market was still buying. It came back to this zone. It was still buying. It was still bullish internally. We want when market has become bearish also internally, so that it will align with the bearish structure of the higher time frame. When both of them align, when both of them are bearish, that's when the sell will start inside the 4-hour POI. So let's mark it again. What happened here? So higher low, higher high, higher low, higher high. He formed this higher low, it couldn't break. So this is still a low, it couldn't break this one. That's not a confirmation. Then he created a new higher high. So this higher low is valid. He created a new higher high. Then he broke the higher low. This was when structure changed on the lower time frame, even internally. And this is when you just wait for market to retest. And it retested at this zone. That's where you enter your sell. That is how you. So this is the PY, all right, and this is a valid PY. So this zone is the POI. Market came to that lower time frame, higher time frame POI, and give you this confirmation. So this is the confirmation we are looking for, standard confirmation. We're not saying that this is guaranteed. There are different regimes in the market. When market is highly volatile, like war or something is happening and headlines are dominating the market, it may seem like nothing is working. You need to observe when market conditions are stable. But when things are stable, your strategy will work. But when things are driven more by fundamentals, by headlines, it can cause a lot of volatility in the market. When there's a lot of volatility, or when market is ranging, it's not advisable for you to trade. But when market has stabilized, then you can be able to trade, and you'll be able to, probability will be in your favor. Right. As a trader, you have to wait until you see your setup. You exert setup. You wait as long as it's possible. You must not trade every day or every week. That's why sometimes for highly profitable trader, there are weeks that you don't see your setup. There are days you don't see your setup. But when you see your setup, 90% of moves that happen in the market are they are noise. They are noise. They just market doing its thing. But 10 to 5%, sometimes even 2 to 1% of the move that happen in the market. These are the ones where market will bend to your will and give you your setup. And that is where you execute. But the 90% of the time, market wants you to bend to its will. And if you bend to the will of the market, you are a retail trader. Market will crush you. You don't have the billions of dollars that the institutions have that enable them to move the market. Retail traders don't move the market. You wait, you ride the wave. As the institutions are moving, as the big money is moving, you move with them. You wait for market to give you exactly. So 4-hour SBR price came here, broke the higher low of this lower time frame of this 15 minutes. You could also confirm it on 30 minutes or 1 hour. It's just but still it has happened. Sometimes it happens even on 1 hour. That's why you use 15 minutes, 30 minutes, and 1 hour. Broke it, and then it came to this zone and retested. The moment it's coming here, there's a bearish fair value gap here. The moment it's coming here to retest, this is where you enter. Your SL is above the 4-hour low, because sometimes price may still do as if it's selling from here and still go up and sell from type 2 or type 3 and still create the same confirmation before it finally sells. Right? If you are putting your SL above here, it is very risky. However, if you put your SL above here, you only target the 15 minutes low, which is here. All right, it is here. All right. So, but this worked well, and price picked up the order, and that was how it sold. You guys understand this? Do you understand this?
Yes, sir. Yes, sir.
So now, when is POI a trap? When this setup has played out, the price comes back there again. Maybe you've taken TP or you missed the trade. If price comes back there again, and you see that price is using that key level, it has been mitigated. So what do I mean that it has been mitigated? It has used that key level. It has used that POI. It's no longer a fresh key level. That's why it is no longer a fresh key level. And if it is no longer a fresh key level, investors can use it as liquidity. This is where, so if it is coming back, the reason why price goes deeper, the reason why POI sometimes goes deeper, or price uses type 2 SRP or type 3 SRP is because it has sold or traded from type 1 and delivered. So if it's coming back, it will now use sweep type 1 as liquidity and trade from type 2 or type 3. So when market have used a particular key level, don't trade from it again. It may play out again, it may come back and play out again, like it did here. Don't use it. It's not advisable to use it again because market can, you will see what market did. It came back again, swept all of it, even change structure and all that. He sold and before it later changed structure and pumped. All right. So when market have used it, the first time market used it, that is it. It's always good to use fresh key level. That is an unmitigated POI. When the market has not mitigated, market will use it first. Market prioritizes the POI that it has not used. That's a priority. Then you can use another POI. You can use the one that it has used before, but don't take that risk. Don't take that risk. Let me even go to synthetic, so that I will show you some things. Let's look at this 50, and this is a pair that I like because of the way you respect structure. Um, 50. You look at this where you could see how it's been respecting structure. It's been respecting SRP. You could see, look at, you know, this is really amazing. This is really amazing. When this is on 24 hours, and when it broke this, when it took the higher low, uh, it started selling. So, but let's go to 4 hours. Even on 24 hours, you will see how it's been respecting structure. But let's go to the 4 hour time frame. It did a massive sell today. All right. So let's start with that. Let's even start with that sell. Let's do this. Okay. Okay. Let's start with that sell. Let's start with that sell. So this is what it did here. So here, after using this one, it didn't really mitigate this zone. It came here and formed a new zone. So this is the high of the range, and this is the low of the range. All right. So let me mark this. So look at the high of the range. This was when you broke all the lows here. This is like even a smaller range inside a much bigger 4 hour range, but we're just using it for teaching people this. So this low here. The moment you broke this low, the high that broke the low, this high became the high of the range of this particular range that it is forming. So what did price do? This was when it came back to the POI. Alright, so let's mark this Fibonacci. So this one used type 3. You see what I said? Use type 3. It did 100% retracement and used type 3. So let's go down to the point of interest. So this zone where it came back to and sold from is the point of interest. All right, the higher time frame point of interest. That was where it sold from. So let's see the confirmation, because point of interest is all about how do you, when you've confirmed structure on higher time frame, when you've seen your setup and known where price will sell from or buy from, how do you not enter the trade? So on the lower time frame. So like I said, we use 1 hour, 30 minutes, and we use 1 hour, 30 minutes, and 15 minutes. So this was when price came there. Right? So you will see that why you couldn't sell from 0.6. It was 0.6. When price came there, it just it did not break this low. It went up, right? It went up to 0.7. It came to 0.7. It did not break. It didn't really do much. Okay, it was at 0.7 that it broke a low. Even if you entered by there, that is still okay. So let's even look at it, what it did there. So look at what price did. Higher low, higher high. Created some kind of higher low here, then higher high, and then it broke this higher low. Right? It broke that higher low. And this was for me when structure change, even on the 1 hour time frame. So let's mark this. And the same thing is what you will see on 15 minutes. This one it broke the higher low that it was using. And basically, and where do you enter? You wait for price to retest, and that was what it did. Retested, you enter here. So let's go down to 30 minutes and see. We should be able to see the same thing. So do the same thing, and 30 minutes very clear. All right. So it bought, created a higher low. It was a massive jump, higher high, higher low. And this higher low is valid because it created a higher high. See? So started from here, higher high, higher low, higher high. And then instead of the higher low was not supposed to be lower than this low. This one has already created a high. If it wanted to maintain the structure, it will just probably stop around here and keep going up. Instead, it broke this low. The moment it did that, this is a bearish market structure shift, and is a change of character, a bearish change of character, and then also a proper SBR. Like I said, a proper SBR, we are going to talk about the price. A proper SBR is not when I want to remove this. It's not when candle broke. So it's not like this. It's not SBR. It's when a structural zone, a structural key level is broken. They want a low, a proper higher low. Look at it. For buy, proper higher low. This higher low created a higher high. Sometimes it may be the one that failed, but it should be a higher low for buy. Price should break it. I mean, for if you want to sell, price breaks it, and especially inside the higher time frame POI, then you if you are the right zone, you wait for a test. This was where there's also a favorable gap here. And this was where price, sold. And even on the 15 minutes, 30 minutes range, 15 minutes, 1 hour range, this is your objective target. So what it did was it broke this one too, it broke this low too, and retested again. And since then you can see it's been selling. Since then it's been selling. And that is very amazing. So but let's look at the buy so that we can also use that as an example. So this particular pair has been bearish. So let's use a pair that has been bullish and for the buy, and that should be this 25. All right, this 25 has been bullish. Okay, so let's use this range. So what this 25 has been buying, and you would think that it has really left you, but it came here and formed this structure, and so this was what it did here. It came here and broke above this resistance, and this is RBS. Do you know the range that market wants to use? When market is just pumping, it has used all these ones. It has mitigated these zones. It has used this one. and it kept pumping and pumping. Eventually, it will come to a particular place and stop. Right, so it broke above here, the body of a candle, created this high, and so this is the low of the range, that the low that created that high. This is the low that created the high. This is the high of the range, and market came back almost 100% retracement. It came back, and even though it did not, it didn't buy immediately. Range there. Let's look at the confirmation. How how you will have entered this trade. The market came here first time. This was on 31st March. So let's go down to an 1 hour time frame. So this is 1 hour. So this was when market broke above. This was when it came back. So let me remove this so that it will be clearer. Like I said, RBS is not just when a candle close above. No, it's not. So what happened here? So look at lower low. So as it was selling, this was what it was doing. It created a lower low, lower high, lower low. If it wanted to keep selling, it would create a lower low and then a lower high and then a lower low. But what it did here was that it took out this lower high. So market must take out a lower high, and that's a proper RBS, even on the lower time frame. It took out the lower high, so you wait for the retest. This one went very far, and you think it won't come back. Came back. This is where you will enter. The other side is at the low of the 4 hour range, and it just kept doing this, and eventually, but even if you have entered here at 3,128 and come out here at 3,170, that is still like massive. He kept giving a lot of entries before he finally bought. So let's mark this. Price is determined to buy from a particular place or sell from a particular place. Like I said, if it uses a POI, it's not good to sell from that POI. So this trade, didn't hit the final TP, but it hit, it gave you some RR. If price is coming back from there, it's better not to use it again. So here it was a fresh key level. You used it, it gave you some TP, you come out. This time around that it came here, this is where it becomes a trap because anything can happen, and you can see what happened. Eventually, price wants to sell from that, buy from that zone, but eventually price will use that POI as liquidity and go down deeper. So price goes deeper if it uses a valid POI as liquidity. All right, a POI that is no longer valid. If it uses a valid POI as liquidity, that POI it will go deeper to use another POI. So you will see and it's always good if a sweeps liquidity before it moves. Here he did some kind of sweeping, a little bit of liquidity and moved, but then it kept coming back, as if it wants to buy from this zone. Use this as an objective target, but this is not really should not be the target. And before you know it, because this POI has been mitigated, as I've used it, this is the second time as of season it came back and swept it as security. It did 100% retracement here and started buying. And this was when he hit the objective target, and since then, he's been buying. This 75. Let's look at another pair, this 100. Let's see this 100. And the buy that he did. So this 100, after doing a massive sell, is trying to reclaim and buy. So here, he broke above here. Even though this is like a buy structure inside a much larger bearish channel, but we want to look at how this buy happened. So RBS, this is on 4 hours. So this is the low that created the high, and this is the high of the range. This is the low of the range, and this is the high of the range. So basically, price did almost 100% retracement. This is type 3. Right. So let's see how you have entered this trade on the lower time frame. So this was on 6th April. This was on Monday. So this is 6/12. So let me use 15 minutes time frame. So this was when price broke above. This was when price came back. So let me remove this. Basically, what price did here is fascinating because you want price to take out the higher low. So this is higher low. So lower low, lower high, lower low. This was when price took out a higher low, lower high. This was when price took out a lower high. If price wants to buy it, must take out a lower high on the internal. And it never came back. Want it to now come back to this zone. It never came back until it was when 6th April, the 9th April. So this was when it came back for a test. So it did 100% retracement. It came back exactly to that low. All right, it came back exactly to that low. So let's check it on 1 hour, which means on 1 hour it will even be clear on 1 hour. So so 1 hour it also happened on 1 hour. So you could see price coming back, selling lower low, lower high, lower low. So when price broke above the low, so the same thing broke the lower high. So it will have come back here and then you enter around here. So, but since this is where you are waiting for price to come back to, so you wait for it. So when it came back here, so it created these lows around here, 50% of the range, and he used this low as he cleared all of them, and swept all of them as liquidity, and then it bought from here. So always, if you want to buy, price must break above on the lower time frame. Price must break above the lower high. If it is 4 hour, 4 hour, you just want price to close above that range. You want that 4 hour candle to close above the range with the body of a candle or below the range. But on the lower time frame, price must break for buy. Price must break above the lower high. You wait for price to come back. For sell, it must break above the high, below the higher low with the body of a candle, not with a wick. All right. So this was where it bought from, and you don't want to just keep buying. Once it hits the objective target, this is the objective target. You're out. Then what in SRP, your first target is the 50% of the range. You will see, this was the 50% of the range, and price always meets resistance there. You know, and then the next target is the final TP, which is around here. And that is where we are on this pair. All right, it closed above again. So probably it will give, let me see, on 4 hour, it should give another setup. Okay. Yeah, well, it didn't close above here. Or I wanted it to close above here. So, but this buy has happened. This particular buy has happened. They close above this one. So it's really bouncing back. It's been rejected cells here. And you have to trade what you see, not what you think. Rejected cell, you could see how it was just creating all these buy structures, breaking highs, creating all these buy structures. Came back here, still, so that is it for this pair. Let's look at the forest pair, the last example. All right, so let's look at this GBP USD. The 4-hour structure. So basically, I opened it and you can see it clearly. So as has been, so let's look at the daily time frame of this structure. We So, this has been a bearish structure, and it became bearish when it broke this low. The moment it broke this low on the daily time frame, it sold, but now it's trying to reclaim it. If it breaks above this high, it claims it, right? But this was when, all this time since 28th January, it's been selling. It's been selling, and now the buy started because of news volatility, news about the war on Iran, and all of that. And if it closes above this, it will just do a retest and then just keep buying. So, but let's look at uh, point of interest where you have entered on the 4-hour time frame. It's always good to wait for market to give you a structure. So this was the last major buy that it did, and let's look at how it happened. So when this sell, came here, this was a structure that market created. So you see, it came here and closed above. Here closed above. The moment he closed above, it shows that, and there's also a support here. The moment he closed above, it shows that this market really wants to go up. So closed above, he swept all these lows as liquidity, closed above, and he came back here to pick order. So let's look at this. How how what it did on the 1 hour time frame. Um, and it's clear, what it did. So let's So it was selling, right? So when price came back to the POI, it was selling, it created a lower low, lower high, lower low. It couldn't break this lower, low. It cleared it, it swept it, right? And this is the lower high. And you want price to break above it, and this was when price broke above it. When price broke above it, this is a market structure shift. This is RBS. And then price came back to this zone and picked order, and even on 1 hour time frame, this is like the objective target, and then since then it pumped, right? Since then it pumped. So for this particular pair, for this zone, this is the POI. This low is this place is the POI, and this is where the moment price breaks above, this is where you enter. So let's see. You see when price broke above, and this is 1 hour. You will see the same thing on 15 minutes, 30 minutes, and there's a bridge fair value gap here. Basically, price just came here and retested this zone, and this was where it bought from on Tuesday. And basically, so this is where you enter, and your SL is below the low, the 4 hour range. It must be below the low of the 4 hour range, not the 1 hour range, the 4 hour range, the main range. And then if you are using trading the 4 hour, this is the objective target. This is where you come out, and then the middle is this is 50% of the range. And it got there actually, it got to 50% of the range, went down as if it was selling, and started buying back again. So your first profit, your second profit, then on the 4 hour, SL should be below this range, 4 hour range, below the 4 hour range. So even on 4 hour, it still even gave that confirmation. You could see when it broke above this, this resistance and came to this 4-hour fair value gap and picked order and then bought from there. So this zone, is your POI, all right, on the lower time frame, that's your POI. So that's the confirmation you use to enter. Don't go below the 15 minutes. For lower time frame confirmation, you don't go above 1 hour time frame. So let's look at for sell this particular pair, how the sell happened. Let me remove this. Remove this and this. So here, interested here. This was when market broke this. So but let's use this. Let's use this one. There's a bearish liquidity grab here. And market broke this low. This was the first time market was breaking all the lows here. The bottom of a candle. SBR. This market from exactly where I broke it with the bottom of a candle. You need to make sure that it actually broke it with the bottom of a candle, and now then wait for market to come back to your POI. So this is the high of that range. So the question is, so the first thing market did, so let's even mark with Fibonacci to see what the market did. So this is the high of the range and this is the low of the range. So you will see market initially came to 0.5 and sold from there. And then at 0.6, it didn't really do anything. It was almost at 100% retracement. The type 3 SRP, that was where it sold from. So let's go there. Let's go to this zone that it sold from so that you will see where you have entered the trade. So this was on 20th of March. So let's go there. So this was when price broke the low, and then this was when price came back. That's this one. This is a POI. All right. So what did price do? This is 1 hour time frame, and so this was price coming up higher high, and this is let's say a little higher low. Basically price broke all the lows here. Then it came back to this zone, swapped it. So basically this is where you enter, you swapped it, and then it started selling. And if you still want to be sure, you still give another confirmation. You see this low. Let me want this. Broke the low. So basically, from here, it started just selling after breaking this, lower, this all the lows here, broke all the lows here, came back here and basically just started selling and selling and ranging and came to the objective target. To the objective target. Let's look at this. Here price broke this low. SBR. And this there is a bearish fair value gap here on the 4-hour range. And if you mark this with your Fibonacci, the Fibonacci begins to be varied when the 4-hour range has completed. When it has not completed, you cannot just go to the chart and mark it anywhere. If you do that, they are just meaningless lines on the chart. But when you have the 4-hour range and they are complete, you can mark it and they make sense and they act as resistance and support. If it is for sell, those levels act as resistance, especially from 0.618 to 1. And the price came to type 2 and that was where it sold from. So let's mark this zone. So this is the POI that price use type 2 POI. So there are three types of SRP, and they capture the three different POIs that price used. The first POI that price could have used is 0.618 this zone, but price did not use it. That's why you enter with confirmation. You don't do aggressive entry. The second zone that price could have used is here, and this was the zone that price used. The third zone that price could have used is here. This is the last zone. If price breaks above this with the body of a candle, it can happen. We're doing news of high volatile market, US government shutdown, anything. Market, sometimes market may not even respect your key level because of the market conditions. That's why professional traders they wait out those, they don't trade in bad market conditions, in unfavorable market conditions. You want to trade when conditions are stable, when conditions are favorable. So you can actually do this and come here and break above. The moment it breaks above that range with the body of a candle, you're out. All right, you don't trade. But it's actually used type 2 POI, type 2 SRP. So let's go down to the lower time frame to see how you have entered. So this was on 10th February. Hope we'll be able to see this. February. Okay. All right. So this is it. So what did market do? Higher high, higher low, higher high. So it was still buying. And what did it do? This was when he broke this. This was when he broke the higher. Basically, this was when he broke it. All right. This was when he broke it, even though it wasn't really clear, but this was when he broke it. If you mark here, you will see even with the body of a candle, he broke it around here finally. So it took out the higher low here, and you basically wait for a retest. And this particular trade, I remember that a lot of people missed it on EU because the same thing happened. It was supposed to then come up around here, but there was liquidity here, a massive bearish fair value gap. And price used it. Price already confirmed sell. So just make sure that your SR is above the flower range. And this was, where price used. Just retested this zone and used this, and then it started selling since then. It's been selling since then. And that is really a massive sell that it did. It's been selling since then. All right. Question. Does
Yes,
anyone
sir.
have
Good evening, sir.
good evening? Okay, go on.
Sir, is the pair VIX 100?
Yes,
You said about trade what you are seeing now, and I felt like on the bigger time frame, like the four
yes.
hour, it's in SRP. I don't know if you can check it.
Okay. Um, all right. You said, go on. Ask the question again.
Yes, sir. You said we should trade what we see,
Yes,
but
yes,
like in VIX 100 on like now the outlook is bearish. Then on 4 hour, I was
yes.
thinking this is a sell SRP from here on the bigger time frame
For
from
our time frame.
this liquidity.
On 4 hour
Yeah,
time frame. Okay, let's go. Let's check.
like from this liquidity gap up there.
Okay. Okay.
No,
If from here.
yes, yes,
Yes,
yes.
yes, yes, yes.
For the
So
sell
yes, yes. So
0.6.
that's okay. That's a bigger, yes, that's a bigger sell range. That is a bigger sell range, and price is coming back there. So let's look at what it broke. Yeah, it broke some higher lows here as well. Okay. So let's see if price have used this, if that sell has happened, let's see if it has happened or not. For the sell to happen, price must touch either type 1, type 2, or type 3. 0.5, that is 50%. If price comes to 50% is not enough. Are you seeing something, Joshua? That sell has happened. Are you seeing it?
Yes, sir.
The sell has happened. And price got to almost to the objective target, and it gave you what you want, and it rejected further sales. It was supposed to go down. It was supposed to take out this low and just keep going down. So what this thing did was basically to ensure that the sell of this range is taken care of. Now, this key level has been mitigated. Another thing that price could do is that it could come to this zone and sell from here. It could come to this zone and sell from here. But if it keeps buying, the moment it takes out this zone, in fact, the moment price closes above this zone, it becomes even more, even bullish. It will just keep buying. All right, it will just keep buying. So, and it was creating small buy structures, and after that, creating small buy structures. After the sell played out, he refused to sell. Instead, he created a buy structure and you know and delivered and all of that. And one of the things I like about this pair is how it just kept respecting SRP here, and you could just see it. RBS came back to the zone and picked order. RBS came back to the zone, picked order. RBS picked order. RBS picked order. Small ranges. RBS picked order. RBS, but didn't pick order again. And then before you know it, price broke up, broke below, and then this sell happened, and it's coming, it's going up, it's going up. Right, any other question?
Hello, sir.
Sir, y-
Yes, go on.
something happened in EU today.
Yes,
USD.
yes,
Do
yes,
you
yes.
will you say the sell SRP that failed was due to the war?
Yes, so let's go to EURUSD. Uh, yeah, we'll go to US. Someone else wants to ask a question. We'll go back to EURUSD to look at what happened.
Okay, sir.
Hello, sir.
Yes, go on.
I just want to ask now. My question is, if you have marked your PY on 4 hours, you go back to 15 minutes. Then on that 15 minutes, when you have seen a break of structure, our
Yes.
duty is to put our Fibonacci again.
Yes. You know what yeah, sometimes if a break on that 15 minutes, if price break structure, yes, and that is actually a break of structure or a market structure shift, a proper RBS or SBR, then you wait for price to retest. And then in that zone, sometimes it must not come down to the discount zone or premium zone. Sometimes it will come to 0.5. You will see the bearish fair value gap. You will even see the zone where sometimes it comes to 0.5, sometimes it does 100% retracement. But the most important thing is that it will retest. You wait for it to retest at that other block, at that zone. You wait for it to retest, and then that is where you enter from. That's where you enter from.
But
Yes.
I just do, okay.
Let me
I
show
think we
you
can
again.
practice it. Just, okay, sir.
Uh,
Thank you, sir. Thank you.
which pair do you trade? Let me use a pair that you trade to show you.
Euro USD or
USD.
GBP USD. But you can use this one. I can understand from this one too.
All right. All right. Let me even use step index. Step index. Do we have step index 100? And it's also a very interesting pair. Uh, it's also on okay, the structure and all that. But let me uh it's 25. Okay, let me use this 25. So this is the low of the range, and This is a massive range. Price close above here for hours. RBS. So let's mark this range. This is the low of the range. This is the high of the range. And price used type 2, almost type 2, 0.7. This was where price came back to, and this was where the buy started. So let's mark this and go down to 1 hour. This was on 19th March. Go down to 1 hour so that you will see what price did. 19th March. So this is when a case where price closed above and didn't really come back. So you will see yes, it's also a break of structure. That's why I said you don't just it's not just RBS is not just when price closes, candle closes above. No, there must be a structural break. This is the higher lower low, higher low. Okay, this was when price. So let me start from here. This was when the sell was happening, market was coming, it was still coming, lower high. So it did this small lower high, then lower low, then lower high. This lower low failed, right? It couldn't break this, and that was when you start noticing that something is changing, but you want this lower high to be broken, and this was when price broke it. So this is like a break of structure. And as though that is not enough, price broke this one too, broke this one too, created this. So this was when price came and picked order. And if you say you are not sure, you want this one to be broken, you broke this and even broke this main one here. And then so basically, the reason why it didn't sometimes price may no longer go to the level you are looking for because it has mitigated those other key levels. So I think I mentioned it on the channel. Sometimes price may just be going up and be doing the mitigation before it does break of structure. So you can see here, it retested, it came here, retested, came here, use this as liquidity, broke up here, broke above here, and this is so it didn't come back here. But just to be sure, always put your SR below the 4 hour low. So basically it broke above all these lower highs, and this particular range on 1 hour, this is a mini range, if inside the 4 hour time frame. You use this particular one and basically retested here and pause. So do you understand it? So it must do a structural break with the body of a candle and then retest. Where you may miss the trade is where it is retesting, when it is retesting. But if you're able to enter at that retest,
When it came to retest, what point are you going to just pick that buy or sell?
that is why you don't just backtest a strategy, you forward test. Every pair has their personality, every pair have the way they behave. So you will backtest the
Okay.
I suggest you don't trade more than 3 pairs. You study those pairs to see how they retest on a higher time frame, how they break structures, how they do RBS, SBR, and how they the POI half price peaks. For this particular one, sometimes it doesn't do. If it is V75, you will see it will come to this zone. Normally, this is the place where a lot of people were waiting for it, but it was just mitigating and going. And sometimes it does. It comes fully. It comes fully to this zone. So, but here it just used this range, this particular range. And if you are to mark that 1 hour range, let's look at uh yeah, it actually came to 0.6 of this particular range. This was the range it used, and that was it. So the more you study price, the more you study charts, you will know when prices where price will come for a retest. But basically on in that in that range, yeah. So once it comes to zero, especially 0.6, you know that it has and sometimes on 15 minutes it will just do a sweep there and you start buying. But I want to show you something on this pair where it did a full retracement. We may not go to the POI. Um, It's okay. So this was when it was actually respected. So you can see it broke above here, RBS. And this is, and it came back almost 100% retracement. Came back. So let's look at even how it picks order here. So this was on 22nd February. I hope we'll be able to get there. We'll be able to get there. 22nd February. Alright. So you see, so when it came, so this was when it was still selling and coming to the POI lower high, lower low, lower high, lower low. All right. And this is actually, if we're actually looking for the main break of structure for the main confirmation, this was when you broke it lower high. And this was where I retested. And so you want to make sure that it price breaks it in major lower high. And this was where, so this is where you have entered. And a lot of people may miss this trade, but this is it, this particular pair. That's why you study a pair and you know where how that pair behaves. Some does do deeper retracement, some don't do. And you can see how it bought to, and created this amazing high. On Forex, it does standard. Let's look at trading view. Let's look at um AUD. Let's use AUD USD. Okay. AUD USD. Okay. So you can see this buy, but if we are to analyze this, it's almost like the EU because they have almost the same structure. It's trading against the dollar. You can see how it broke below here. So let's even use this. For this particular one, it did a bearish liquidity grab and then it broke below here. Just broke lows here as we have. And it retested here. So at this zone where you have a 4-hour bearish gap. And this was on 19th March. And this is the objective target. It got to that objective target. In fact, during this war, this pair used to be very slow, but price action even became fast on this pair. So let's go to 19th March and 18th March and see what happened here. How price picked order. So basically, what it did on 1 hour, it just broke below the range and peaked. But let's look at 15 minutes. Twenty-nine, 27, 26, 25, 22. Okay, this is it. So yeah, okay. So let's mark it. So basically, higher low, higher high, and this is higher low. And this higher low did not really create new highs, it just kept, so we started seeing bearish exhaustion, created a high here that was not above here, and then broke the low. So on 15 minutes, you could see that it's clear. It was when it broke the higher low, and so I like this. It came here retested. So the person asking question, you could see where it retested. Right? So basically, it came
Yes,
here
sir.
and tested. Yes.
Yes, sir.
So this is where you enter. The moment you, so when will you know that okay, it is time for you to enter the trade? The moment on the lower time frame, 15 minutes, 30 minutes. So that's why if you are checking on 1 hour, also be checking on 15 minutes. 15 minutes is actually the correlation time frame for 4 hours. Some people the time frame they use in entering a trade is 15 minutes. So and most time at the right zone, if it is at the right zone at the valid POI, whatever happens on 15 minutes, you will see it on 1 hour, you will see it on 30 minutes. And sometimes you may not even see it on 1 hour. It will happen on 15 minutes and then the trade will start playing out. Eventually you will see it on 1 hour, but by that time it will not come back. Sometimes it comes back, sometimes it doesn't. So but the moment you break this low, this higher low, then you just wait for it to retest and you enter here. Your SI is above the 4 hour range and you target the 4 hour low, and your first TP is the 50% of the 4 hour range. So basically, so that this was what it did, and if you are using this Nifty this, you will see that by then there was a bearish fair value gap here, and that was what it used for 15 minutes, and it just kept selling. And this was when the war was happening. So, but okay, let's look at EU and what happened today. So this is not what we are teaching. EU USD. So let's look at EU and why I call that sell. So EU came here and did a bearish liquidity graph, and this is SBR. And I now call the sell. And you could see, what it did. It actually sold a little bit. So it did 100% retracement, sold to 50%. Like I said, when price gives you 50% of the range, sometimes it may not even go to the TP. It sold to 50%, rejected. And why did they reject? Trump announced that, there was an announcement that, the war in Iran, they are negotiating the peace deal and all of that. So anything about right now, yeah, I'm recording this video on 10th of April 2026. Anything about the war on Iran, if there's anything about peace resolution, it pushes EU up, pushes EU, all the pairs trading against the dollar, including gold, pushes them up and pushes US dollar down. And I said it in the channel that news like this can violate key levels. They can violate structure internally. All right, even though this structure is correct, but there are some news that can come out. That's why fundamental analysis, you cannot disregard it. There are some news that can come out and it changes the market. It may be temporary, but the market changes at that point in time. So it actually sold, and in the morning when I shared the chart, it was selling then, but I felt like it needs to at least get to this zone at least before any other thing. I noticed that the market condition was changing. There is also a report that US and Iran will have talks. They will have negotiation tomorrow at Islamabad, a city in Pakistan. So all of those news were really affecting the market. SP 500 started buying, JP 225 even started buying. All the sell structures were violated. And this particular pump, look at where market even created this key level. It didn't really get to TP. So sometimes in a bad market condition, in unfavorable market condition, market may no longer be getting to full TP. That's why a lot of people say they are going back to synthetics. Why are they going back to synthetic? They are hitting SL on support. You could see this is a massive 4 hour bearish zone range, and he picked up that he had the same thing. It was supposed to even come to this zone. It did not come. Why? That day, Trump announced that Trump gave a 48 hours announcement that Iran should agree to a ceasefire, or he's going to wipe their civilization, wipe out their civilization. And then on that day, on that Tuesday, that was the deadline. Just that Tuesday, when EU, when GU, all of them were at this low, trying to break this level, and the announcement came up that they have agreed to a ceasefire. And this is where you see where sometimes fundamental can override technical levels. The moment the ceasefire was announced, that they have agreed to, Iran and US have agreed to a 2-week ceasefire. That was when this sell was violated, and anyone that did not take TP at 50% of the range, it started pumping. The same thing with all of them, the SZD, USD, GU, the same thing. You see, almost the same structure. It started pumping, and so that's it. Also, GU did the same thing. You see, GU also did as if it would sell. This one has not even hit SL. GU has not hit SL. Is it trying to do as it's just still ranging? So that is it. Some news can be volatile, especially under the Trump administration. A president that likes to tweet, a president that monitors the market, a president that is also a trader. His friends are traders. Last year a lot of people lost money on BTC because Trump will make a tweet about tariffs against China and BTC will dump. But you will hear that Trump insiders, they made a lot of money. So they knew about it. So how come they knew what the president would say? So, someone that has people, and that is a crime, it should be illegal. People that have that kind of knowledge, they will make a lot of money from the market, but a lot of people will lose. And sometimes Trump makes announcements in such a way as though he's trying to make money from the market. He knows when the stock market is down. Last year, April 25th, when the stock market was down due to the tariff, he told people to buy. He said, buy now. Now is a good time to buy. And after that, he made an announcement. He postponed the tariffs, just like he was doing with this war. Because the tariffs, everything about the tariff was making market to sell. All right. He postponed the tariff after saying buy now, and then the stock market went up. All the people that bought, including me, made money from the market. So this is a president that is aware of the power that he has. Biden wasn't like that. That is why people that traded under the Biden administration are learning trading again now. Can you hear me? They are learning trading now. They are going back to learn trading because what they learned was not working. It's no longer working. Biden and other presidents, they release statements. They don't tweet like this. But Trump, if he wants to make an announcement, he will tell you that he has an announcement. And sometimes the US is at the center of the financial market. The market will enter a wait and see mode, and they will start waiting and waiting and waiting. And that announcement, he will do it in such a way that it will impact the market. Whatever pair you trade at that time, at that point in time, key levels can be violated. But if you focus on the high time frame, daily, weekly, monthly time frame, it doesn't really, all those are temporal, it does not really change much. And trading is all about long term. So if there is any fluctuation, short-term fluctuation in the market, it doesn't affect your long-term view and your long-term goals in the market. Like I said, Mark Douglas met a profitable trader who lost 20 consecutive trades, and he was asking the person, why are you not bothered? He said that he cannot be bothered because the short-term fluctuations cannot affect the thousands of trades that he used in creating his system, and he's thinking long term. All right, he's thinking of them. So there are times when market conditions are not favorable, like during war, especially at the beginning of the war when market have not really settled. Also, another time is summer, especially August, when the banks and market makers are on holiday. Another time is also December period when most of the people that provide liquidity are on holiday. Another time is during US government shutdown. when they are not announcing news that drive the market up, and some economic data, critical economic data and all this. So the thing is, when you discover that market is unfavorable, you can just wait it out. Everything will come back to normal. Everything will come back to normal. And that's also why people learn how to trade synthetic. Synthetic do not have news. All right, synthetic do not have news. So if you see, synthetic is all about technical analysis. So if you combine forest and synthetic pairs together, that will give you an edge. That will give you an advantage. Any other question?
Thank you, boss. Thank you so much.
You're welcome. You're welcome. So I believe that. So we today we looked at varied POI, unmitigated POI, mitigated POI, inducement. The inducement is, like I said during range, inducement always forms at 50% of the range. All right, but you are waiting for price to come to a POI, which is 0.6, 0 or 0.7, 0.8, or even 1 of the range. So price initially can form you give you even the confirmation you are looking for at 50% of the range. But these are people that enter early. If you enter early, price will then use you as liquidity and clear that place, sweep it, and and then before the actual trade happens.
VIX 5 because I think this 50% stuff is what is happening there now at VIX 25.
Yes.
So do you think it will,
Okay. Go.
or can we check this?
Do I think it will do what?
It will sweep them because it has 50%.
Okay.
If we at VIX 25, the
Okay.
current market structure.
Yes. Okay. Um, okay. I will not trade this. Market is ranging. It's been ranging since Thursday. And let me even tell you what this market could do. Broke above here, the body of a candle.
Yes, liquidity, swap.
So you can see that market has not really. So let's even look at this range. So I'm seeing a trap here. Okay. So it actually came to 0.618 and picked order. But sometimes when market pick order at type 1 and is not heading to TP, that's why you should be very sensitive and know when to come out. That's one of the things. When market is not heading to TP and it keeps ranging, but it has given you 1:1, 1:2, 1:3, come out of the trade, because market may then use the type 1 as liquidity. So you are correct that it may sweep this low as liquidity. So it may use it as liquidity, and this pair likes to do that. So it may now come back, use this low as liquidity, then buy from type 2, below it, or type 3. So
Okay.
yes, it may actually do this.
Can we check if there was a confirmation there? Maybe that was why it's buying.
Of course,
Maybe
yeah, it will always give confirmation before, but that's why we have type 1. And SRP is the only strategy that has type 1, type 2, type 3. Others will tell you just buy here, but we are telling you that market uses 3 POIs. And if the first one, after it has, and now it has used this, actually, it's no longer a fresh key level. So if it comes back, it's going to sweep it. Any key level that market has used, market is likely to use that key level as liquidity, even though it was valid before. But the second time market will use it, it may use it as liquidity. All right. Sometimes market can come back and still use it as still buy from there, but don't trade using a mitigated POI. So okay, so let's go to 1 hour. See, the market came there and just started buying. It has not even retested. 15 minutes. what he did, this particular pair, he just a lot of people who have missed this trade, seriously.
And if he comes back there,
Well, so
it
it looks
should.
like something that will come back because it didn't. And if market do not do a proper retest, then it will come back. So it closed above this lower high, but instead of probably coming around here to retest, it just did this, just kept buying. Now it's looking like something that will come back. So someone will say, I've missed this trade, I've missed this trade. Well, it looks like it will come back. It looks like it will
And
come.
buy because
Yes, it looks like it will come back. And on 15 minutes, he just kept creating all these small SRPs. This is dangerous. You don't trade here. You don't trade. This is the equilibrium, middle of the range. You now started using the middle of the range, which is dangerous. Which is dangerous. Yes. So that's even the middle of the range. Is even using yeah, middle of this particular range. This range has not fully formed. So yeah, this is dangerous. This is not a place to buy. So either you wait for market to take out this high, and then we know what is we know that this one has delivered, or you wait for market to come back to this one. So any other question? Any other question?
No, sir. Thank you, sir.
All right, thank you everyone. Thank you everyone. So the more you back testing is good. Back testing is very important, but the most powerful one is forward testing combined with back testing. Sometimes you may back test a strategy and everything is looking good, but you don't know. It's only with forward testing, except you have trading view and you can use replay. You will see exactly what price did and how it picked up. That you can't see it, on just back testing. So when you are back testing, also before testing, that is where you can now. This is how you use a demo account. You can use a demo account to forward test a particular pair, a strategy on a particular pair for at least 3 months, 3 to 6 months at least. So you get to see, observe price action and see everything about that pair, how it behaves. 3 to 6 months, forward test. Rolling it. You mark your range. You set where your entry, put your SL, and then you see how it played out, and then you journal it. You will learn a lot. And then when you now want to trade, I advise that you trade with either you trade with a Pro Firm account or you trade with a Cent account. When you are good trading with Cent account, because Cent account will lower enable you to lower your SL. On synthetic uh pairs that allow you to trade with Cent account is V75 because they have 0.001 loss size 0.001. You can trade with Cent account. Uh if you have funds, you can still trade with the lowest lot size on some synthetic pairs. But forex pair, you cannot really use $5 to trade, Euro USD or gold. So forex pair, either a Profim account or a Cent account, but you can use both Cent account and a Profim account. When you are now good and everything is working well for you, you can then use a normal dollar account. But don't even use a dollar account when you've not really tested your strategy well forward, tested it for like a year. So that's why on Twitter you see people say, I lost $300. I lost what? It's not their real money, it's their pro firm account. So if you lose 10K dollars, instead of losing $10,000 because of bad market condition, that is your real money, you are losing just $60 that you used to buy the 10K prop account. Now, if you lose 220 cents, instead of losing $220, you are just losing $2.2. Right? You're just losing $2. And you cannot use $10 to trade Euro USD. But if you change $10 to a Cent account, it becomes $1,000. And with $1,000, you can even trade any of the pairs that, for example, a broker like SNS, because they have Cent account, accept. There's Euro USD, there's BTC, there's so many pairs there, and you can even risk 30 cents, 15 cents. If you lose the worst you lose is that 10 cent or 15 cents. I can use it to trade and keep. The most important thing is not to make money, is to stay consistent, reportable to execute your system and know that your system is working. If you are having losses, the most important thing is that at the end of the day, on the long term, your wins are more than your losses. So you know your win rate. So these things are the things that will help you. All right. So you will see how everything interacts. You could see, with structure, knowing the structure of the market, range, marking the range on 4 hours, then going down to the lower time frame. All right. Then you will now know even the time frame that you could use. For your entry, is it 15 minutes? Is it 30 minutes? Is it 1 hour? Some pairs they mostly play out on 15 minutes. Some they like gold, for example, for lower time frame. Some like 30 minutes and some 1 hour. So these are things that you will now know about specific pairs and how they work. All right. All right. So thank you everyone for joining us. I wish you all the best.
Possible for you to work us through